Okay. What we are meant to look at today, do we have any challenges relating to the other part of the sources of government revenue we discussed? Do we solve that question number 6? Hello? I said, do you try the question number 6? And you are okay with the question? The one I gave us an assignment that you should go and touch. You should go and try your... Well, if we don't have any challenges with the question, I think we can... I don't know if you can solve it. This is the question I'm referring to. Question number 6 in our study pack. This one. 6B. The following transactions were anticipated by the Office of the Accountant General of the Federation for the year ended 31st December 2015. And these are the things given to you. They now say that you are required to prepare the Federation account and also prepare the following word statement. Statement of consolidated revenue fund. You also meant to prepare statement of revenue received and overhead cost. Did you try to go through the question?
I've not. I don't know if others did. But for me,
Others, do you have any idea of that question, or you still want me to solve this one? Because we're supposed to start another new topic today.
You can solve the solution while we continue from this one today. For those who did it, that correction.
You want us to solve the question? Hello, Mr. Lukman.
Yes, I would like us to solve the question.
Yeah, you can solve it or provide us with the solution.
Okay. Just provide the solution. Let's go to this new topic. We can go through the to see where we need errors.
No problem.
Yeah, that's fine by me too. Let's go to the
Okay. Now, what we are looking at today is authorization of government expenditure, control of government revenue, and fund accounting, which is relating to the fund management. Now, in the public sector, authorization of expenditure must be authorized by a particular officer before the account officer can spend money on the government force. Now, and if you look at it, government expenditure is basically classified into two. We have what we call recurrent expenditure and we have what we call capital expenditure. The recurrent expenditure is referred to as expenditure that government incur in order to generate revenue. That is what we call recurrent expenditure. That is the expenditure that normally occur on a yearly basis in order for government to generate revenue. That is why they also call it another name for recurrent expenditure. It's called what? Revenue expenditure. Why capital expenditure are what? Expenditure incurred on capital projects by government. Now, we need to have idea what are the likely area that we are looking at when it comes to capital expenditures. As capital expenditure is concerned, it is basically classified into two in the public sector, which we call infrastructural capital expenditure and what we call basic amenity expenditure. Now, what's the difference between infrastructural facilities and basic amenities? Are they the same thing? My question is to the general class. The difference between the infrastructural facilities and basic amenities. Any idea?
I think the basic amenities are those essential things that without having them, a society cannot truly function. The infrastructure has to do with construction of bridges and the rest.
Is you have idea? Any other person? Any other contribution? Absent of none. Infrastructural facilities are those capital projects put in place by the government in order to enhance economic activities of the nation. Such as what? Power, building of Kanji Dam. Kanji Dam is one of the projects that we can refer to as what? Infrastructural facilities in order to generate light to enhance the economic activities. That is the business activities. There is no business activities in Nigeria here that does not require what? Electricity. That is one. Now, building of what? Tertiary institutions. Building of what? Major bridge, highway road to link a particular state with another state. Is different from street and market. But when it comes to pipe-borne water, these are basic necessity of life. The capital project that relates to what? Basic necessity of life, such as what? Pipe-borne water. We look at it from the what? Medical center for health or health center. Primary and secondary school. Those ones, they are infrastructural, they are what? Basic amenities, basic necessity, amenity of life that are very, very what? Necessary. Government cannot do without them. And for government to incur all this expenditure, there is what we call authorization. What do we mean by authorization? Authorization is the approval to be given for expenditure to be incurred. And the approval, as public sector is concerned, it is meant to be done by Minister of Finance by using what? Warrant. What is warrant? Warrant is the document of authorization for government expenditure to be incurred by the officer in charge, which is the Accountant General. Let's read the summary of the what? Introductory part of this. Government must be properly authorized and approve its budget, its what? Expenditure. The authority which conferred power on the officer controlling expenditure or vote to incur expenditure is called warrant. Nobody has the power to spend the public money without what? The issue of what? Warrant. All warrants should be issued and signed by Minister of what? Finance. Warrant is basically classified into two. We have what we call recurrent expenditure warrant and we have what we call capital expenditure warrant. The recurrent expenditure warrant is the warrant to be released for related recurrent expenditure or revenue expenditure on a periodic basis. While capital expenditure warrant is meant to be released for capital projects or special projects. Now, this so-called warrant is divided into two. We have what we call recurrent expenditure warrant and we have what we call capital expenditure warrant. The recurrent expenditure warrant is meant to be released for recurrent expenditure, while capital expenditure warrant is meant to be released for capital projects. That's the one between the two. But the two are having a component that are meant to be discussed as we are going. Now, as we now have it under recurrent expenditure, we also have it under capital expenditure like that. We have what we call annual general recurrent expenditure warrant, provisional general warrant, we have supplementary general warrant, we have reserve expenditure warrant, we have supplementary contingency warrant, we have supplementary statutory expenditure warrant, we have virement warrant. These are the 7 warrants we have. As we now have it under recurrent, we also have it under capital expenditure. In order for the officer in charge to control the expenditure. Any questions before we go to the next level? Now, annual general warrant. This is the warrant to be released by the Minister of Finance, warrant to be released by the Minister of Finance in order to take care of the payment of personal emoluments and other related expenditure or overhead. Other related expenditure or overhead. How does it look like? Let's read it and see whether what I've said is different from what you have. This authorizes the Accountant General of the Federation to release funds for the payment of personal emoluments and other services provided for the approved estimate of budget. It is also authorized the officer controlling expenditure votes to incur expenditure for those purposes. However, Minister of Finance may exclude from the annual general warrant any item of expenditure on which it desires to exercise special control. The copy of the warrant is addressed to the Accountant General, while duplicate is ordered to the Auditor General. What are we talking about here? Minister of Finance is an officer charged with the responsibility of issuing warrants, authorizing the expenditure to be to be incurred. Through the releasing of warrants. The warrant will be released by the Minister of Finance. A copy of that will be forwarded to the Accountant General, which is authorizing the officer in charge of that controlling the expenditure to incur the expenditure. That is, the payment of that particular expenditure can be carried out immediately there is the release of the annual general warrant. And a copy of that will be forwarded to the Auditor General's office. But the Constitution allows the Minister of Finance to exercise rights by excluding some item from that particular warrant after the budget has been released. The budget has been released, but they have the power to remove some item that this item will not go for now. That is, and anything that is talking about under this particular it basically we are talking of personal emolument, that is staff salary and other administrative costs or overhead that are meant to be incurred by the government. They will release this particular warrant for that. Aside this one, there is another warrant called Provisional General Warrant. The Provisional General Warrant is another warrant to be released by the Minister of Finance to the Accountant General for the continuity of the government operation. This particular warrant says that it's going to be released before the approval of the budget. When budget has not been approved, they will release what we call Provisional General Warrant for government to continue their operations. This will be in operation for maximum of 6 months, minimum of 4 months. And the amount to be spent before the approval of budget for the release of this warrant must not exceed the last year budget or the previous budget. That is what we refer to as Provisional General Warrant. That warrant is basically meant to be released for activity of the government to continue. Now, let's also read this and see what I've explained, whether it's the same thing. This is issued at the beginning of the financial year before the Appropriation Act comes into operation. Appropriation means what? approval of the what budget. It provides for the continuity of service of government on a scale not exceeding the level of the service in the previous financial year. The warrant will be in operation for maximum of 6 months or until the Appropriation Act comes into effect, that is approval of the budget. Whichever is shorter, the amount expendable under the provisional general warrant must not exceed the sum expended during the same period in the previous year. Such money spent shall not exceed the amount specified in the approved budget, and any such money utilized shall be set off against the amount provided in the Appropriation Act when it comes into the operation. Original copy of this will be forwarded to the Accountant General of the Federation, and duplicate copy forwarded to the Auditor General of the Federation. Any question? After that particular provisional warrant, another warrant is what we call supplementary general warrant. Minister of Finance has exercised what? His or her right to release what? Warrant and exclude some things from that particular warrant release. Then, in line with that, budget is also not being approved by the what? National Assembly. They are also meant to approve what we call supplementary budget. Whether one is under what? Statutory. Now, as a result of that, to take care of those things, then they are meant to release what? Supplementary, which is what? The warrant is issued for annual general, for additional personal emolument and other services provided for in the approved supplementary estimates. However, Minister of Finance may exercise on the supplementary budget any item of expenditure on which it desires to exercise special control. Simply means Minister of Finance can also exercise right by excluding some budgetary item from this to be approved. They've approved it, but it can hold on to them while they look into other related issues, which those ones are meant to be taken care of in the nearest future when it's going to release reserve warrants. What we're saying here is this: for additional supplementary budget to be released in terms of personnel emolument and other related administrative charges or costs, there must be what we call supplementary warrant for that. When they release the supplementary warrant by Minister of Finance based on the supplementary budget, they can take care of the related issues as a result of additional personnel costs or other related services. Then supplementary general warrant will be used to take care of any additional personnel emolument. But the Constitution gives the authority to the Minister of Finance to remove or exclude any budgetary item from the supplementary budget if not really satisfied at that particular period of time, or there is no cash to take care of those expenses. Any question? A copy of this will be forwarded to the Accountant General's office, while photocopy will be forwarded to the to the Auditor General's office. Then the next one is reserve expenditure warrant. Reserve expenditure warrant. This is another type of warrant to be released by the Minister of Finance for those items that Minister of Finance has exercised his or her right by removing or excluding some items from the annual general warrant and supplementary warrants. Now, when he tried to do that by excluding the words in the annual general warrant and supplementary warrants of items, then is meant to release reserve expenditure warrants to take care of those items excluded from the annual and supplementary warrant by releasing what? Reserve expenditure warrant. That is what it means. Simply means that the reserve expenditure warrant or reserve expenditure general warrant is meant to be released by the Minister of Finance to take care of excluding items from the annual general warrant and the supplementary warrant. Any question? Now, aside that, we also have what we call supplementary contingency warrant. Supplementary contingency warrant. This is another type of warrant to be released by the Minister of Finance when requirement is not what taken on board. That is, when requirement is not possible or used. And this is meant for contingency situation that cannot be delayed or postponed. Now, looking at it from here, this is issue in exceptional cases where requirement is not possible. 2, application of additional provision review such high degree of urgency that issues of that fund cannot be postponed until supplementary appropriation act pass. That is, for them to release what supplementary general warrant, government is not going to be what available or possible. And 2, it is basically meant for any forms of additional cost or additional expenditure that cannot be delayed due to the what situation at hand. Example of this scenario whereby government release what supplementary on top of what COVID-19. During the what COVID-19, monies are being released by the government to take care of the situation at that particular point in time where everybody were asked to work to stay in their houses. That is contingency situation that cannot be delayed. Now, we said contingencies fund warrant must first be issued by the Minister of Finance, authorizing the Accountant General to transfer necessary funds from the contingency fund to the consolidated revenue fund. Now, if there is no money in the contingency account, they will transfer money from the consolidated revenue fund account to the contingency fund account. But where there is excess, they can transfer back to the what? To the consolidated revenue fund. That is what we call contingency warrant. Now,
Mr. Can you take that again? I don't understand that contingency warrant.
Contingency warrant is the warrant to be released by the Minister of Finance for situations that cannot be postponed or delayed, such as what? Natural disaster. It is a duty, immediately the federal government or the state government says that this has been approved, it is a duty of the Minister of Finance to release what? Such warrant to the Accountant General for expenditure to be incurred on any forms of what situation that cannot be delayed or postponed because it is they are emergency in nature. Is that clear? And anytime they are now using contingency warrants, they must not use vehement warrant. While vehement warrant will not be possible. Anytime they are using vehement, they will not use contingency. And it is for urgent what? Attention. What do you say?
It's clear. Thank you, sir.
Okay. Let's read it from here. They said application for additional provisional review such high degree of what? Urgency that the issue of the fund cannot be postponed until supplementary appropriation act. That is, they cannot delay it till the time that government will approve the supplementary budget. As a result of that, they will release the contingency warrant. Contingency fund warrant must first be issued by the Minister of Finance, authorizing the Accountant General to transfer necessary funds from the contingency fund account to the Considered Revenue Fund account. Therefore, supplementary contingency warrant must be measured in monetary terms from head and sub-head. Any question? Yeah. Another scenario or another warrant that is meant to be released is what we call vehement warrant. Vehement warrant is as a result of what? On contingency, unforeseen circumstances during the time in the annual estimate were being approved and additional provision is required under the particular head or subhead. An equivalent amount should be saved under another subhead of the same head. However, vehement warrants should not be used to create a new subhead or for item disallowed by the budget or estimate committee. To be successful, application for vehement should be considered. In writing, state a particular subhead in deficit, state another particular subhead in surplus. Indicate both subhead as within the same economic head. State after the transfer, the other subhead will not be deficit. State the vehement warrant are not sought to create a new subhead. Now, what we are trying to say here is this. Vehement warrant is nothing but what? Another warrant that will be in use where contingency is not possible. They will use vehement, which is meant for contingency or emergency situation that cannot be postponed before the approval of the appropriation act or budget or supplementary budget. You are allowed to transfer money from a particular subhead to another subhead under vehement. And you must state clearly the purpose of your transfer from a particular head or subhead. And you must not make that particular account where you are transferring money from to be deficit. And you must not, because you wanted to create what? A particular, you wanted to what? You wanted to move money from a particular subhead to another subhead under a particular economic head. You are now rendering that particular another what? Subhead deficit. And you cannot use that particular transfer you are doing from one particular head to create another subhead. It's not allowed under environment. These are the conditions for environment. One, it is basically meant for economic works. It's basically meant for unforeseen circumstances or emergency that cannot be delayed before the approval of the annual budget or estimate or approval of the supplementary budget. You are allowed to make provision to transfer money from a particular head, from a particular subhead to another subhead under environment. But you cannot render a particular account deficit as a result of you transferring money from a particular head, from a particular subhead to another subhead. And at the same time, cannot use that particular transfer to create another account. It's not allowed. Any question? The next one is supplementary statutory expenditure warrant. Supplementary statutory expenditure warrant. Warrant is another warrant that is meant to be put in place by the Minister of Finance. Exactly. And what does it mean for? For any additional or supplementary budget put in place by the government. Now, let's read what is here. It said, this authorizes additional expenditure over and above the including in the annual general warrant or supplementary general warrant. That is, at any point in time, the government is releasing additional expenditure to be incurred as a result of additional budget in place by the government. They are also meant to release what we call supplementary statutory expenditure warrant based on the Constitution. This approval must come from the National Assembly. The original copy of the supplementary statutory expenditure warrant will also be addressed to the Accountant General. Why copy of that will also be forwarded to the Auditor General. It is customary for this Minister of Finance to notify the officers who are in control of the relevant books of the supplementary expenditure made available. Simply means officer in charge of both book. It is the duty of the Minister of Finance to address them anytime there is approval of the supplementary warrant. After that one, we also have what we call capital expenditure warrants. If you look at them, they are almost the same thing with what we have done. Provisional, annual, supplementary, reserve, supplementary, special warrant, environment warrant. It's only that these are meant for capital projects, while that one are meant for recurrent expenditure. Any question, please? Okay, if you look at it, Development Fund Annual General Warrant, this authorizes the Accountant General of the Federation to issue fund for expenditure on capital projects as contained in the approved capital estimates and mandate the officer controlling the expenditure over both groups to disburse on the capital project envisaged. the authority to incur expenditure will be convened after the National Assembly has approved the capital expenditure budget. All these are English in a simple form. In a simple analysis, you will have a better understanding of it. Hello? Hello? No one. I want to know online. Now, for capital projects, there are administrative costs, paying of the workers that are working, their wages and salary are also meant to be paid. Charges are also meant to be considered. They are also meant to release these for them to be able to take care of that, which must also be in the budget that is subject to approval of the National Assembly. When the National Assembly approves that, that is when the warrant will now be released by the Minister of Finance to the Accountant General, which is giving the authority to the officer in charge to start incurring or doing the payment for those expenditure for capital projects. Another one is the provisional. This one is not the same, it's not far-fetched from what we have discussed before, that this is issued before the approval of the capital estimate or budget. This can only be in operation for maximum of 6 months, or time for the approval of budget is shorter between the two. Only basically meant for capital projects to continue. That is, they will not suspend the capital project prior to that budget. They will continue working on the project, but they must not spend more than what they spent in the last budget, as we have explained, for that particular capital project. And they will net off that particular one they have incurred, because they have incurred on that particular capital project before the approval of the budget, from the budget approved. Let's look at it, what I've tried to explain. This is issued before the approval of the capital estimate, which is the budget, by the National Assembly at the beginning of the financial year. It authorizes the payment from the development fund. What is development fund? Hello? Mr. Lukman and others, what is the development fund account? What is development fund account?
Is
Sir,
account for
is
capital
a government account for capital projects.
It is not a corporate account, though. Government account.
Government account. That is the account put in place by the government to monitor capital projects. Anytime they now want to spend money, they will go to that account for capital project to spend money from that particular account. It authorizes the payment from the development fund of such amount that is necessary for carrying on the project for which expenditure are authorized in the previous financial year for a period of 6 months, or until the estimate or the budget is approved. Are we together?
Yes.
Now, the next one, Development Fund Supplementary General Warrant. This is another warrant to be released to the Minister of what? By the Minister of Finance to the Accountant General of the Federation to issue fund for the officer controlling board's book. concerned to incur the expenditure on a project as sanctioned by the National Assembly. On the project that has what? Sanctioned by the National Assembly in resolution approving the supplementary capital estimate. The Minister of Finance may exercise by removing the item or this and that from the what? Annual general warrant, annual development general warrant, or from the supplementary what? Warrant. Development Fund supplementary warrant. What we're saying here is this. There are items that has been excluded from the what? National budget initially by the National Assembly. After those ones has now been approved, then they will now, Minister of Finance is now meant to release what? Warrant to take care of those ones that now later approved to carry on with the what? With the sanctioned projects, capital projects. And Minister of Finance has the right to hold on to that some of the project that this one cannot what? Start now. He or she has that right to do that. Nobody can penalize, can query him or her, saying that why are you doing this? Why are you doing this? Due to the fact that he look at the nature of those projects and see that this one should go first, this one should not go now. But any project that is now exercised by what? Excluding them, then is meant to release what? Reserve warrants to take care of that. That is what brings about what we call Development Fund Reserve Expenditure Warrant. For any item excluded, by the Minister of Finance from the Development Fund Annual General Warrant and Development Fund Supplementary General Warrant, then the Minister of Finance will now release what we call Development Fund Reserve Expenditure Warrant to take care of those items excluded from the Development Fund Annual General Warrant and Supplementary Development Fund Supplementary General Warrant. Any item that he or she has removed, they will release what? Development Fund for capital project. You need to be indicating whether it is capital projects by relating with what we pass as what development fund. Why if it's ordinary, we call it what? General warrant alone is allowed. Then the next one is what? Development fund supplementary warrant. Now, this one for any additional capital project that is later put in place by the National Assembly or the executive to be approved by the National Assembly after the supplementary and the annual general warrant. Then they can also have what we call the statutory development fund statutory warrant. That one is basically meant for any additional costs to be incurred as a result of what additional projects being put in place or approved by the National Assembly after the approval of the development fund annual general warrant and development fund supplementary warrant. That is the purpose of that additional warrant, supplementary warrant that's meant to be released for additional costs incurred. Not that government approval, not that government release supplementary project. They look at it as additional costs to be incurred on this particular capital project. As a result of that, they will release a supplementary budget on that. They are also meant to put in place what we call supplementary warrant for additional costs on the capital project. Now, this warrant authorizes the additional expenditure over and above which is included in the Development Fund Annual General Warrant and Development Fund Supplementary General Warrant for the purpose of revolting capital expenditure which was provided for in the previous financial year, but not fully spent. Accelerate the provision of the fund already formally allocated but not voted for a project, and also accelerate the completion of the specific capital project. That's why we say additional. Another one is for special projects, which is this one. You know, we have what we call contingency there. They don't call it contingency here. They call it what? Development Fund Special Warrant, which is meant to play the role of what? Contingency warrant. This is issued in exceptional case where environment is not possible. You know, that was what we have under the annual contingency warrant. Environment is not available, then they will use what we call special relevant fund special warrant. Provision for the release of the additional fund review such high degree of urgency, that is, it is an emergency what? Capital project, emergency capital project, that the release of the fund cannot be postponed or until the supplementary capital budget estimate is approved. Where they cannot delay that particular capital project till they will approve the supplementary budget, they will raise what we call development fund special warrant. The same condition we have there is the same condition we also have here. That is, you cannot transfer fund from that particular account, from a particular subhead to another subhead, and make the where you are transferring the money from to be deficient and the other one to be what? Surplus. And you cannot use because of the transfer you wanted to create another account to create another account. No, you must use it for a particular purpose, not to create another subhead. That is for environment. Then where there is, I mean, that is for special projects. Then where there is requirement, we not use what? Special warrant. Is that clear? The two are, they are the same thing, but different way we use them. Now, let's look at it. Development Fund Environment Warrant. These warrants permit the issue of what? Additional fund necessary for completion of a capital project for which money already allocated in the estimate is not enough. There must be, however, be sufficient or offsetting the savings in the amount apportioned for the other project in the same economic program. Now, that's why we're saying that reallocation can be made only with the same head of the expenditure. The reallocation must not give rise to a new principle or policy. That is, we are not going to create another account. It cannot be used for providing funds for a new project. These are the conditions attached to this. Now, on a general note, all warrants are issued in 2 copies. All warrants are meant to be released in 2 copies. One will be forwarded to the Accountant General. A copy of that will be forwarded to the Auditor General's office. Notification to the effect will be forwarded to the officer in charge. That's all. On the aspect of what? Warrants. Aside all this, all the warrants we have looked into, do you understand? We have some questions we are coming back to look into. You understand? We also have what we call revenue control. What do we mean by revenue control? What is revenue control? The revenue control here describes various checks put in place by the government in order to monitor the revenue or the account put in place for the revenue was collected by a particular officer. Now let's look at what they are saying there. Revenue control describes various checks put in place to ensure that all money due are received and accounted for. The revenue control system in the public sector is designed to have the following elements. What are we referring to? One, periodic monitoring. This is the application of what we call internal control system. We have what we call periodic monitoring. We have policy revenue administration system to ensure that services are not rendered without charges being levied. Timely issuance of demand notice where there is a delay in the revenue, and follow up to track the down debt. Timely issuance of revenue documentation for anyone that they have received. There must be an evidence in terms of what? In terms of voucher. Funds lodgement into the bank account. There must be what we call what? Revenue cash limit. That is the cash, the revenue that can be held by an officer within a particular period of time. There is a limit to that. We also have what we call establishing of authority limits for the revenue to be holding on to. There must be what we call limit. Then establishment of the what? Functional system of internal control and constant review of the procedure. All these are what we refer to as revenue control. In addition to this, we also have what? Keeping of what? Record on a periodic basis, and aside that, balancing of accounts on a daily basis. Balancing of accounts on a daily basis, those are the additional ones. You are meant to put a reconciliation of accounts for the amount you have received together with the bank statement. Accounting reconciliation must also come on board. Aside this, we also have what we call funding principle, that is fund accounts. What do you mean by fund account? What account are we funding? What account are we managing? Fund account is nothing but what? Various separate accounts put in place by government in order to monitoring what? The fund created at each end. Now, let's look at it, what it's saying here. It's a fund accounting. Fund accounting is the fundamental principles underlining the government accounting. Underlining what? Principle for stewardship purposes in the income of the government. This is categorized in series of words. Funds. What are those funds we are referring to? Now, the word fund has been defined as a specific, separate fiscal and accounting entity in which resources are held, governed by special regulation, separated from the other funds, and established for specific purpose. What are we talking about here? We are saying that fund account is a separate physical and accounting entity in which resources are held. That is, government creates a fund account in order to keep what? Resources. And there is a special regulation for that particular fund established for specific purpose. And we have different classes of what? Revenue or fund. Classes of fund is basically classified into three. We have what we call government fund, we have what we call corporate fund, and we have what we call fiduciary what? Fund. What is government fund? The government fund, they are used to accrue the what? Resources that are relating to or derived from the what? General tax or for tax purpose. That is the funds that relates to tax. That is the government fund. That is the revenue generated through tax by the government. Revenue generated by government through taxation. That is what we call government fund. Revenue generated through taxation by the government. We also have what we call preparatory what? Preparatory fund. That preparatory fund is the fund set aside by the government for investment or business activity in the government or in the public sector. These are the funds used to account for the revenue derived from the business activities of government and its agency, such as what? Parastatals. All these parastatals and public enterprises, all those ones, they are the what? They are the organization put in place by the government, and they are meant to create fund for them. That fund created by the government for that is what we refer as what? Preparatory fund. That is why we say preparatory fund is the fund put in place by the government for business activities, for business purpose. And we have fiduciary what? Fiduciary fund. This is the fund put in the government account, put in the what? Government account as a custodian. That is, government keeps such fund to manage on behalf of other organizations or other nations. These, let's read it now. These are used to account for the resources held and managed by the government in the capacity of a custodian or trustee. Example of that, we have what we call Petroleum Technology Development Fund, Trust and Agency Fund, Pension Fund. They are not the owner of all these funds, but government are there to use the money. They will manage it and pay what them later in the future. They are fiduciary what fund. That is the fund held in the account of government as a custodian. Those are the classes of fund we have. What are the types of fund we have? We have what we call general fund, we have capital project fund, we have special fund, we have trustee fund, we have contingency fund, we have intergovernmental service fund, we have revolving fund, we have self-liquidating fund. These are the type of fund we have. The one we call the general what? General fund. What do we mean? That is the fund held in the what? Account of the government to manage the government activities. This is meant to appear in the consolidated revenue fund accounts. Now let's read it what we have in our notes here. They said it is a fund established for resources which are devoted to finance general administration services of the government. It is also called consolidated fund. That's why I said the fund held in the account of the government in order to manage the government activities across the 3 tiers of government. Section 5 of the Finance Act says what? Stipulate that the management of the fund should be in accordance with the requirement of the Constitution of the Nigeria. Now, the Capital Project Fund, that is the fund also what? Created or set aside by the government for capital what? Projects. Acquisition of capital assets or facilities. This is held or the fund is meant to be held or kept in the development fund account. Another name for the capital project fund is called what? Development fund. Now, we also have what we call special fund. Now, special fund is created for what? For a particular purpose. Immediately that purpose is ended, that's the end of the fund. It is the fund created for specific purpose, e.g., South Africa Relief Fund, African Staff Housing Scheme, All these, they are special funds created by the government. Trust fund, that's another fund created by the government for a particular purpose. E.g., Petroleum Technological Development Fund, Research Foundation Fund. All these are meant to be given to all these organizations. Government creates it out of the what? The fund they generated. Contingency fund, that one is for what? Unforeseen circumstances or situation that cannot be what? Delayed. Unexpected what? Situation. We also have what we call intergovernmental fund. Intergovernmental fund. As that one is also concerned, this is established to provide service to other funds in between one government and the other. That is the fund set aside by the government in order to take care of the issues of other governments. Money can be given by the state to the money can be given by the federal to the state to sort out some issues. If you can still remember, there was a particular time they created what we call bailout fund to support what the state government by the federal government. That's an example of what we call intergovernmental fund. When the state is unable to take care of the situation, the government put into a situation and give that to the revolving fund. That is also known as what? The capital put in place by the government as for them to be able to manage the activity of the government. We call it working capital fund. It's created for service provided, design unit to other departments. In a simple analysis, it is the capital put in place by the government to be able to carry out anything relating to what? Government activities or services rendered. Self-liquidating fund. Now, this is another fund put in place by the government to carry out a particular project in order that such fund can be able to pay off the bill at that particular period of time. This is a fund into which resources are transferred periodically, out of which any money or an amount left have to be transferred to the current, e.g., deposit fund. Deposits are held on behalf of the other third party. Now, government will collect deposit from you. They will put it in a particular account for a particular period. Then any expenses incurred on that particular fund, they are not meant to incur anything. It is that particular money that is generated from that particular fund to be able to take care of that fund or expenses incurred. That is what they call self-liquidating fund. On the last part, we have what we call government expenditure. These are various actions or strategy put in place by the government in order to control the expenditure that is wholly, reasonably, necessarily, exclusively for a particular purpose. Now, let's look at what definition of this is what it's talking about. This can be defined as a strict of coordinated actions which have to be taken into secure that all expenditure are wholly, necessarily, reasonably, and exclusively incurred for a particular purpose. That is, any money approved by the government are basically used for that particular purpose. If not, sanctions put in place by the government. What are these various controls? We have what we call executive control, legislative control, Minister of Finance control, Treasury control. We have departmental control, Office of the Auditor General control. These are the various controls to be put in place as the public sector is concerned in terms of expenditure control. Executive control, legislative control, Minister of Finance control, Treasury control, departmental control, and Office of the Auditor General's what control. Then when it comes to what? Executive control, what do we mean? Executive comprise of what? The president and his what? Cabinet, who have the responsibility for the efficiency and control of the what? Of the administration of the country, politically and economically. All this control put in place by the what? Minister in each ministry has been approved by the what? The president, are various control to be put in place by the executive. The Constitution created two other arms of government, legislative and judiciary, for the purpose of check and balancing. Simply means the executive is the head of the government, while the judiciary and the legislative, they are there to act as a watchdog to check the what? The executive on what they are doing by the Constitution. President shall cause to be prepare and lay before the National Assembly the national budget. It is the duty of the what? President to ensure that they prepare the budget. After the preparation of the budget, is going to take it to the National Assembly for submission. National Assembly will scrutinize the budget and approve it. After the approval, then they sign into law. That is what they refer to as executive control. If the president failed to sign the budget that has been approved by the National Assembly, sign into law, then the total of the House are in support of that. Then the president of the National Assembly can sign that into law, is allowed by the Constitution. Now, the president, in order to satisfy the provision of the Constitution, also appoints a cabinet committee on estimate to advise on the contemplated policy measures. The policy measures contemplated are the transmitted to the budget. Simply means there is a budget committee that will also advise the president on what to do concerning the budget prepared, whether this should be removed, whether this should be added before the submission. They are there to provide a guidelines on the budget preparation by the ministry and parastatals, as well as agency. All these are the various controls to be put in place by the government. Now, we also have the second one, legislative control. These are the control put in place by the National Assembly in terms of finance. And this control is divided into two: antenatal control, antenatal government expenditure control, and postnatal government expenditure control. Antenatal is the control put in place by the National Assembly before the approval of the budget, while postnatal is the control put in place by the government, by the National Assembly, after the approval of the budget. Now let's look at what this is saying, whether what we have said is right or wrong. We know. National Assembly is the supreme authority on matters of the nation's finance. The control exercised by the legislature is both antenatal and postnatal. The antenatal control is in the sense in which the legislature consider and approve the estimate submitted to it by the president. Postnatal is the review of the transaction after payment. That's why we said the antenatal is the control put in place before the approval of the budget, where they will scrutinize the budget, removed, and add what they think are necessary before they will now put it into act. After they now approve the budget, they will also need to monitor all what they have approved, whether what they have made the payment for are those purposes they approved in the budget. If not, then sanction will be given to the president. And I said, no matter of the public fund may be split or spent, may be spent without the approval of the National Assembly. No amount of the public fund may be spent without the approval of the National Assembly. However, Section 82 of the Nigerian Constitution empowered the president to spend from the Consolidated Revenue Fund to carry on the administration of the government of the federation for not less than 6 months, or until the coming into operation of the Appropriation Act, that is, coming into operation of the annual budget. It can be spending money from the Consolidated Revenue Fund. The Constitution allows the president to do that prior to the approval of the budget. Then the next one is what? Auditors General of the Federation control. Auditor General is meant to scrutinize and investigate and cross-examine all the record, all the financial record put in place by the Accountant General of the Federation. And anything discovered is meant to be reported to the National Assembly. That is what the standard says. That is what the law says. And the Auditor General for the Federation could scrutinize all the accounts and records of the money collected and spent and report to the National Assembly appropriately on the instance of waste, extravagance, inefficiency, or fraud. You don't need to talk to the president or the Minister of Finance or the Accountant General. It's meant to report to the what? National Assembly on anything it discovered in the process. They can now call the Accountant General to come and answer query together with what? His Minister of what? Finance, in case of any fraud or misappropriation of fund. That is Auditors General's control. Then the next one is what? Minister of Finance control. That is basically what we refer to as what? The release of what? Warrant for expenditure control. Now, if you read it, you will see there that it is warrant they are referring to. They said when ministries or departments require money to pay for service, they normally apply to the Ministry of Finance for such fund. The tradition is that once a year, the ministers and the parastatals present estimates to cover their needs and require, which are expected to prudent and necessary and wholly in accordance with the financial regulation and appropriation. The minister pass on the Consolidated Revenue Fund and expenditure estimate to the president, which will present them to the Federal Executive Council for approval before they forward to the National Assembly as what appropriation. Nobody has the authority to say that they want to spend this without what estimate being prepared. When they now approve that, the Minister of Finance will release what warrants for that, for them to incur what the expenditure. Then we also have it here, control by warrants. The warrants authorize the Accountant General to release funds from the Consolidated Revenue Fund or Development Fund account. The system of warrants gives the executive greater control over the issuance of funds than will be offered by a system which relies solely on the provisions of the appropriation. Simply means, apart from the budget estimate that the Minister of Finance is meant to look into, is also meant to look into what the release of what? Warrants, which is another control that is meant to be looked into. The next one is the what? The Treasury Watch control. That is the control put in place by the Accountant General for setting of the standard and the guidelines that are meant to be used in keeping the what? The record for the revenue or the receipts and expenditure being incurred in each ministry or parastatals. Let's see what the motive referring into. Accountant General has the overall responsibility for the total expenditure of government. In his office, we keep the necessary books of accounts to record all the receipts and expenditure of various ministries and departments. You can see that. Inspectorate Division. Inspectorate officer from the Office of the Accountant General of the Federation visit various ministries and the department to evaluate the system of internal control put in place by the Accountant General. Accountant General is one to put in place the internal control, is meant to put in place the accounting system in all ministries. Then he has that power to visit the ministry at any point in time, saying that you want to come and check your books of accounts, whether what you have put in place is relevant or not. If there is no compliance level, then they will sanction those officers in charge. That is another one. We also have what we call internal auditor. Internal auditors control. That one checks what? The productivity, the efficiency, and effectiveness and compliance level in each ministry, and in order to measure their performance over time. This is another aspect of control exercised by any organization. The Treasury dispatch internal auditor to the ministry and self-accounting department to appraise the efficiency of the existence of internal control check and report upon any inadequacy discovered. Not different from what we have explained. Then departmental control, that is the keeping of what? Departmental votes book in order to monitor the public or government spending. Departmental votes is meant to be prepared by the officer in charge. Now let's also go through it before we hand it off from that end. Now, a departmental votes book, a departmental votes expenditure allocation book is a record of payments made and liability incurred under the votes or fund approved for each ministry. We now have it here as ministerial department, extra ministerial department. A vote book is meant for each head or subhead of the expenditure. There is a particular head and subhead based on what we have done there. If you remember, we have discussed something like this before. That is, under the head, we have a particular head, we have the subhead that they will approve that particular appropriation for, based on the budget approved, that this is the appropriation for this particular transaction. You cannot spend above or below that particular transaction. If you spend below, you are meant to retire the remaining amount. Now, a vote book is maintained for each head or subhead of expenditure. It is integral part of the budgetary control system. The book is designed to facilitate vote wash, to ensure that expenditure incurred are not excess of appropriation. Any question? Another control that you also need to monitor is what? The use of voucher. Voucher, but that one is not But prior to that, any question first?
Yes, I have a question. This
Any question?
yes, I do. This warrant that is being signed by Minister for Finance, is it that when the budget is being submitted and approved by the Senate, the Finance Minister will sign that warrant out, then the Accountant General will just start disbursing at the right time, or the warrant will be released in batches, like maybe, oh, this is the stage of work you want to do, then the minister
Now,
will approve.
okay. As expenditure is concerned in the public sector, Mr. David, let me answer this one, then you can also come up with your own question. Now, if you look at it, before government can spend money, budget, they will need to prepare budget. Prior to the end of the year, they will send all the ministry and administrative department or parastatal agency to submit their budget for the coming fiscal year. After the submission of the budget to the departments involved in charge, planning and control ministry, then they will look into the budget. It's going to pass through Accountant General's office, pass through the Minister of Finance office, before they will now put it into the president. They will advise the president about it. When that budget is now approved, Minister of Finance annually, all what are meant to be be expenditure at each ministry must have been stated. Minister of Finance will now release the warrant, which is the authority given to the Accountant General to dispatch the fund to the officer in charge to disburse. Taking for instance now, personnel emolument, which is the civil servant salary. They must have looked into how many staff do we have in this particular ministry. We have 20, we have 30, we have 100, we have 50. Okay, what is their salary grade level? I don't know whether Mr. Idris has discussed what we call personnel budget with you. Has he discussed that?
Yes, we have done that.
Now, if you now look at that, under that personnel budget, you have a grade level. You have those that are meant to be promoted. They will factor in those ones. They can be able to know how much we meant to set aside for this particular department or unit. Immediately they approve the budget, that is the warrant to be released for that particular and they are meant to monitor it, that okay, that is what you use the money for. That is why you discover that after the approval of that budget, it is very hard for government to say that they want to increase staff salary within the year. No. Even if there's going to be increment, they can pay that in arrears in the future, not at present. Likewise, other projects on the capital aspect too, that's the same way we have looked into it there, that immediately they approve the budget, Minister of Finance is meant to approve the to release the warrant to the Accountant General, saying that the authority has been given to you. Go ahead and start spending the money. Is now going to give the authority to the officer in charge that, okay, you can continue. You can start disbursing the fund. But without that, none of them can disburse any fund without warrant being released. That is why immediately the Minister of Finance release the warrant. A copy of that will be forwarded to the Accountant General. The photocopy of that will also be forwarded to the Auditor General's office. Aside that, they will also notify the officer in charge that the warrant has been released to the Accountant General. Is only there to wait for the disbursement to take on board. That's all. Any question? Mr. David, can I hear your part?
Yes, sir. Sorry. I want to confirm if you said that if the president refused to sign the budget,
Yes,
the Senate president has the right if the House has voted it to
yes.
sign it.
If the two-thirds of the House is in support of that budget, two-thirds of the House is in support of the budget, and the president is not agree on that budget, the immediately two-thirds of the House are in support. The Senate president has that right to sign the budget, and they will put it into use. That is the part of what control. You know, when we are talking of, we have under the legislative control, we have one antenatal before the approval. They will first check all what the budgetary items that been submitted by the president to the National Assembly. They can remove and they can add that, okay, by constituency to constituency, these are the budget they stated that they need. Why don't you add this? They will add it. Why do you add this? This one's supposed not to be added because these are the conditions attached to this. They can remove those ones. After that, if the president now decided that no, I didn't agree with you, the two-thirds of the House supported that particular word of that budget, they will put it into bill and signed by the national word. The president of the National Assembly is allowed. Any other question? Any other question? Any other question?
No, sir.
Okay. Now, another topic which I also meant to discuss along with this, in order not to waste our time, you can say that next week we solve question. There is a particular calculation question I will also need to look into in there before moving to the next topic, which is this one is not a major topic. That's why I think we should just take our time, just 1.5 pages to take our time to look into it. We have what we call voucher. What is voucher? Voucher is a document of evidence of receipt and payment. Document of what? Evidence of receipt and payment. Specifically, government financial regulations state that all payments must be by means of describing form, which is the voucher. No payment is going out in the public sector that will not require the release of what? Vouchers. That's another control that is meant to be put in place in terms of the public what spending. And voucher is divided into three. We have what we call payment voucher, receipt voucher, and adjustment voucher. Payment voucher is meant to be used when there is a payment going out in the what public sector job account. Anytime there is revenue coming in, that is, there is a revenue that is meant to be received, they are meant to release what we call received voucher. But where there is correction of error or transferring of a particular property from one ministry to another ministry, or from one department to another department, or from one agency to another agency, or transferring of what? Inventory, then they are meant to use what we call adjustment voucher. These are the three types of voucher we have that are meant to be used in the public sector. Now, based on what I've explained, let's see what the note is talking about. We have payment voucher. Any money to be paid by the government must be supported with a payment voucher. This is to serve as an evidence that payment is made for the goods purchased or service rendered. For any payment, there must be what we call the use of payment voucher. Voucher are prepared at the point where payments are meant to be effected. Now, what are the good quality of a good voucher? That when you say a voucher is a good voucher, what are the pictures you are meant to look at? A valid payment voucher must contain the following particulars, such as what? Date of the voucher, which will be indicating its lifespan. They give the limit to that. We have what we call classification code into head and subhead. Lydia. Hello? Hello? I'm saying like I will call you. Correct. I'm answering what amount in word and figures. Are you with me? The amount in words and figure will also be stated clearly. We also look at it from another word, another head. We talk of what? Voucher. The voucher number. We look at the description of the payment, the name and the address of the payee and the beneficiary will also be stated. Supporting documents such as local purchase order, invoices, store receipts, and contract agreement will also be stated in there. Authorities such as signature of the officer controlling the expenditure will also appear there. The cashier signature will also appear. The payee signature will also appear. Certification will also stated in there. That is what we refer to as what? Qualities of a good payment voucher. Now, for us to use voucher, there are guidelines to that. You cannot just wake up and say you want to just use voucher. What are the guidelines that are meant to be followed? Now, in line with what financial regulation, a sub-account officer may not make payment against voucher unless one, voucher is satisfied for payment by the officer who is authorized to do so. Two, voucher is stamped, checked and passed for payment and duly signed by the checking officer, stating the name and his station. Voucher is also stamped, enter the vote book. If you can still remember when we prepare vote book, we are asking what is the voucher number. It's compulsory. That officer in charge also needs to monitor that. No payment can come out without that. Now, in line with that, how do we prepare voucher? Voucher shall be made in ink or blue pen or maybe pencil, or shall be typewritten. All copy must be legible. No eraser of any kind. That is, there is no use of eraser to clean up anything on the face of voucher. If there is error on it, you rather cancel such voucher. You cannot correct anything there. Use of correction fluid is not allowed on voucher. On the last part there, a single thick horizontal line shall be drawn immediately before and immediately after the naira. That is, you know how do we normally cross it to make sure that there is no space for anybody to write anything. That is how we are meant to treat the voucher. Is that clear? Where payment voucher is presented to the sub-treasury or cash office, for the purpose of obtaining cash for payment to be made elsewhere, as it is case of the payment of salary. A check or cash order form has to be signed by the officer authorizing the voucher. That's another condition attached. Bearing the signature of the officer authorizing the voucher and the check or cash to be released. Payment voucher is prepared, that is, whereas a payment voucher is reported loss, the following procedures should be followed when there is a lost voucher. There is what we call lost voucher. A, prompt investigation should be carried out. Prompt investigation. 2, it should be established whether payment has been made or not. You need to confirm whether the payment has been made or not. 3, it should be ascertained whether or not cash drawn is still on hand, whether the person has collected the cash, whether the cash is still with that particular person. Reports should be made by the account officer to the Accountant General office stating the circumstances of the losses. These are the treatments for any lost voucher. First thing, investigation needs to be carried out on the lost voucher. 2, we need to ensure that the payment has been made or not. 3, confirm whether the cash is still in the hand of that particular person or not. And the situation needs to be reported by the account officer to the Accountant General's office, stating the circumstances or the nature of the loss of the voucher. Then the other 2 vouchers are these. Receipt voucher. A receipt voucher is the document evidence that the sum stated there has been received. That is, it is a document that is meant to be issued out when a particular revenue or a particular amount is received by an officer in the public works sector in line with Treasury Form number 15, pay-in form. When it comes to adjustment voucher, it is a documentary evidence of former entry which enable transfer to be made from one account to another account without actual receipt or payment of cash. That's why I say that anytime you are transferring from one account to another account, or you are transferring this from one place to another, then you use adjusted voucher. Payment of inter-ministry services, use what we call adjustment voucher. Correction of accounting error, we use adjustment voucher. Update ultimate allocation of unallocated stock, we use adjustment voucher. Carrying out adjustments or transfer between accounts, use adjustment voucher. These are the adjustment voucher under this part. They now say adjustment voucher are usually initiated by the creditors department and sent to the debtors department for the acceptance of the charges. The following particulars are required on the adjustment voucher. Reasons for the transfer or adjustment needs to state it. Why are we doing that? Debit or credit? 2, voucher number, month of the account, particulars of the treasury or audit query. What has happened, stating the condition relating to the adjustments. Any question? Any question? Yeah, absent of no question on this part. Look at this particular question. You can take your time to go through the question under this part. This question number 3 here. Page 41, question number 3. Wasobia will look into it. They said you should prepare what? Write all the trustee fund to this transaction in the books of Wasobia, showing the fund account and investment account separately. Prepare consolidated balance sheet. That is the statement of asset and liability they want you to prepare in this part also. Okay. When we are done on that, by the grace of God, this is what we're going to look at in our next class. Before moving to the next topic. Our next topic is what? Cash office. Cash. How do we manage what? Cash. Please, any question? Cash office. Need to look into all these details. And how do we prepare the what? How do we do reconciliation on these parts? And how do we also write a report? Everything I've done everything down there. Then in our next class, we look at it holistically. Any question? Hello? Any question?
No question from my end, sir.
You, absent of no question, take your time to solve the question I asked you to do and look into the other question. Those are the two questions we are going to look at in our next class. After that, we move to the next topic, which is cash office. If we don't have any question, you can take your time to relax before you start your next class. You have 15 minutes to start your next class. Enjoy the rest of your day.
Sir, please remember to send the solution to the question above.
Okay. The other one you made mention of, Abi?
Yes, sir.
Okay. Please, the class governor, please follow up with me. I can do that for you during the week. I will send to you. I don't know whether I even have the solution already on the system. Let me check.